Ladies and gentlemen, today is the 9th of March 2021. It's 4 minutes past 1 o'clock local time. This is euro dollar in an hour chart, trading just below 1.1905. So yeah, as you can see from yesterday's video, which was called a pre-dumb money switch video, this is actually the dumb money switch now here, you can see. So from longies to shorties, and from the green bars to the red bars, and the smart money response by doing this pullback up. Yes. So this is a game. I've shown it several times now. Right now, there's not much tradability because, look, if there would be more shorties in the market, and one could be confident that this will lead to a full reversal or grail pattern, excuse me, then one would consider a long trade. Sorry, but right here, after this steep increase, it can normalize, or it can even, if longies come in such a scenario, it can even attack the low once more, and those empty stops here, the orange lines you see. So I'm not keen on placing any trade here. This is not enough to place a trade. I just wanted to show you that this is the mechanics which are always going on. So yeah, for example, if the price normalizes a bit and goes back towards the median, the 1.187, and then more shorties come in, for example, that could be a pullback entry up. That would be one scenario. Or if the price comes a bit higher, but then longies come in, even though the price is out of the range, if nice targets are below the price, that could be a potential short trend resumption trade. Those are two possibilities, you see. Now, in such a scenario, you need to be careful because the price is overstretched and out of the range. So there's high dumb money tolerance, which you can also see by the dumb money switch indicator, you see. So longies, if they come in, overall, they're not that significant. You understand? So that's why you have to be careful in such scenarios, and you have to definitely, for example, place a stop in case that such a trade doesn't work out. You can just get stopped out, yeah. And yeah, for any potential longs, as I said, I mean, if it comes down and like really good, some good shorties come in, and the net dumb money switch indicator does a slope up, then I would consider a long, but not before, So here you see right now we have the dumb money just pulled in some short-term stops, the blue lines. So they will do a little down move and take those out. You see. You could scalp that because the steep increase and the stops are right below the price. Actually, you know what? I'm gonna do a little scalp here because why not capture that live? But it's not worth a lot, so it's placing a lot of lots in such a setup. Okay. So yeah, so these are limit orders, those two orange lines, because they are above the price. Those are medium-term stop orders of the dumb money longies, because they're below the price, remember. So there it comes. Let me zoom in a bit, actually. There we go. This is almost a bit like a little failed dumb money switch, because these shorties are not enough to induce a full move. There it comes. Look, the first one turns yellow. Second one just taken out as we speak. Okay, you get the idea. I've shown that many times. So just normal short-term stop runs. Okay, I'm taking profits here. Boom. That's the little one. All right, so I don't want to make this video super long. Okay, so yeah, but you get the idea. All right, so this is a market situation where there's no strong bias in the market, and we wait for something more substantial. You know, whenever we want to place a trade and risk our capital, we need a bias which is strong enough, either with, you know, a clear story or a lot of the money activity in terms of positions, a lot of the money activity in terms of stops, okay, or we get some kind of cheaper entry into the chart, or in the direction of the economic plausibility, or, you know, like the story overall is very clear. We have like maybe a clear target on the longer term time frames, or we have like a post stop hunt retracement move, or a failed reversal, or a fake out, a false breakout, or a real breakout where the money is placed on the wrong side. You know, I've shown so many things on this channel, so you get the idea. So you still need the discipline to wait for the right setups. You know, it's not that just because you understand the market structure you can place trades all the time. Now, of course, you can place much more trades than you can without those significant tool sets, for sure. You know, that's a one big advantage. And secondly, also, you know, if you try to trade statistical systems that work for some time, and then, you know, the pip values change, the ranges change and all that, and then it dies. So that is a big one. That it does not happen here. This doesn't die. You understand? It's always about that, constantly. It's always about dumb money versus smart money, always. So if the pip values change, or sometimes there's a squeeze move, and sometimes there's more consolidating price action, or more whipsaw price action, whatever it is you see on the two-dimensional chart in front of your eyes, for the naked chart, it's always a result of this. Always. You understand? Not the other way around. That's why this is leading information. So the chart itself, the price is always a response to the market structure and market causality. Like you see here, look, those longies, boom, down. Some shorties, boom, pullback. You get it? The story continues. Look at the last video I made on EURUSD explaining all the scenarios we have seen in the last 2 weeks. Yeah, it's always about it. Always pricing in positions which are on the way. Taking out short-term stops which are, you know, easy to grab without major moves. Normalizing. Then reaching plateaus, reaching target levels. Okay. Then at some point, if the markets are overstretched or understretched, higher money tolerance, out of range scenario. So grip, snap, go the other way, take out all the traders in all directions. Boom, 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 house clean. Right? Look at that. Boom, the second one taken, and the last one turning yellow, and then will disappear as we speak and as we predicted. Okay, so it's always the manipulation. Every move is a result of the smart money making decisions. You understand? I hope this is clear and you understand the implications, the significance of all that. This is not shown anywhere else, not on YouTube, not in, you know, I should really do this, also this book, but, you know, this will take me a few years because it's a big job and I can't work on this full time. So this is a long-term project for me to summarize it. I've summarized it nicely on the website, on the channel, etc., the playlist, blah blah blah. All right, so anyways, stay safe everyone. There was a little follow-up. Goodbye.